Microsoft stock tanked 4% on January 29th, 2024, but you think it was just earnings? Data proves it's your AI investment blind spot costing billions.
On January 29th, 2024, Microsoft shares closed at $411.54, down 0.8% from the prior day. But the real plunge hit after hours ahead of earnings. Intraday volatility spiked as traders priced in Azure slowdown fears. By January 31st open, MSFT had shed 7.1% to 394.26, wiping $260 billion in market cap. Data from Yahoo Finance shows trading volume surged 45% above average to 62 million shares on the 31st. Pre-market futures dropped 5.2% on January 30th post-earnings leak anticipation. Nasdaq confirmed MSFT underperformed the index by 8 points that week. Why this timing? January 29th marked peak analyst anticipation for Q2 FY 2024 results, released after close on January 30th. Bloomberg terminals lit up with whispers of Azure growth missing street estimates.
Azure grew 28% site? Wrong. Here's the data gap. 28% growth and miss?
Microsoft's Q2 FY 2024 earnings, filed January 30th. Revenue hit $62.0 billion, beating estimates by $70 million. Net income, $21.9 billion, up 33% year over year. Intelligent Cloud segment, home to Azure, delivered $25.9 billion, up 21%. But Azure-specific cloud revenue grew 28%, below Wall Street's 31% consensus from FactSet. Operating income margins slipped to 42% from 45%. Capex data stunned. $10.7 billion spent in Q2, with FY 24 guidance raised to $44 billion minimum, 55% hike. CEO Satya Nadella stated in the call, as we are building data centers at unprecedented scale for AI. Transcript from Microsoft IR confirms 80% of capex now AI-driven. Refinitiv data. Analysts expected Azure acceleration from Copilot hype, but OpenAI partnership costs ballooned, implied 1.5B plus in Q2. Competitor Google Cloud grew 26%, AWS 13%, MSFT still leads, but growth deceleration triggered sells.
Not a flop, a warning. Data on what's next.
On new post-drop analysis. Goldman Sachs cut PT to $450 from $460, citing elevated capex pressures. Piper Sandler noted, AI monetization lags infrastructure spend. Options data from CBOE, put-call ratio hit 1.8 on January 31st, bearish bets peaked. Short interest rose 12% to 1.2% of float per Ortex. Broader context, Nasdaq dropped 1.9% same day, but Magnificent 7 average fell 3%. MSFT led losses. S&P 500 data shows tech valuation multiples compressed. MSFT PE slid from 38x to 35x forward. January 29th dip aligned with antitrust news. FTC sued Amazon same week, spilling fears to MSFT's Activision deal scrutiny. SEC filings show DOJ probes into cloud dominance ongoing. Visuals, Analyst quotes pop-ups, put-call chart spiking, short interest graph, Magnificent 7 table, B-roll, courtroom gavel, SEC building.
Buy the dip, data says wait for Q3.
Though, forward data. Q3 guidance projects revenue $62.4 billion. Azure expected 30% plus growth per Bloomberg consensus, but capex could hit $50 FY 25 historical parallels. Post-2022 earnings miss, MSFT rebounded 25% in 3 months. Current RSI at 42, oversold per TradingView. Institutional ownership steady at 71% via 13F filings. Risks, AI bubble fears, NVIDIA capex dependency mirrors, MSFT. Opportunity, Copilot Enterprise subscriptions up 70% MOEM per earnings. As of today, MSFT trades at 415s,